Have you been feeling your money doesn't go as far anymore? Does the whole federal tax system simply confuse you? Well, today we're not just going over the new tax brackets, but I'll also share some tax changes that create opportunities for even more tax savings than before. Hey there, tax warriors. Welcome to JDD Tax. I'm Brian Eustache, enrolled agent and tax strategist. I call myself a tax tactician leveraging the tax code to the fullest extent. And with this segment of Tax Tactics, we're tackling a topic that they never really explained in school: tax brackets and standard deductions. Let's be honest, tax warriors. Inflation's been warring with our wallets. So the IRS, bless their bureaucratic hearts, has adjusted the tax landscape to level the playing field a little. This means new opportunities to outsmart Uncle Sam and keep more of your hard earned loot. Let's crack open the tax code and break down these weapons. And if you'd like to see more tax content like this, hit the like, comment down below. Now, tax brackets. Think of them as income hurdles. You jump over each one, leaving a bigger chunk of your money behind the further up you go. I just want to remind you that the United States uses a marginal tax rate system, which means the tax rate of a particular tax bracket does not apply to the entirety of your income. It only applies to income within the limits of that particular bracket. Let's break down the tax brackets for single filers in the US. If you're making income between $0 all the way up to $11,600, you're going to be taxed at a 10% federal tax rate. That's the first of 7 federal tax brackets. If you're earning income between $11,601 all the way up to $47,150, you're going to be taxed at the 12% tax bracket. If you're earning income between $47,151 all the way up to $100,525, you're going to be taxed at the 22% tax bracket. The 4th tax bracket will tax your income between $100,526 all the way up to $191,950 at a 24% tax rate. Income between $191,951 all the way up to $243,725 is now going to be taxed at a 32% tax rate. If you have income between $243,726 all the way up to $609,350, you're taxed at the 35% tax rate. This is where we start getting into the top 1% of income earners. Any income over $609,351 is going to be taxed at a 37% tax rate. So 37% is the maximum tax rate that you can be taxed at. To recap marginal tax rates, if you make it to the 32% tax bracket, not all your income is subject to 32%. Only income between $191,951 up to $243,725. But just know that the married file joint tax brackets are different from the single tax brackets. You can always pause and take a closer look. Taxpayers may use married filing jointly status if they are married and both agree to file a joint return. Otherwise, you and your spouse each report income, deductions, credits, and exemptions on separate tax returns instead of on one return jointly. That's married filing separately. And it's also different for head of household. If you're an unmarried taxpayer who maintains a home and have a qualifying dependent that you're claiming on your tax returns, that allows for you to qualify for this status. Some taxpayers will find themselves saving just from the new tax brackets alone. For others, there are new standard deductions. If you're not itemizing deductions, you get to take the standard deduction. This is your magic shield deflecting a chunk of your taxable income. In 2024, it's gotten a boost for both single filers and married individuals filing separately. It's now $14,600 for 2024. That's an increase of $750 from 2023. And married couples filing jointly can now save $29,200. That's an increase of $1,500 from the last year. And for heads of household, the standard deduction will be $21,900 for the tax year of 2024. That's an increase of $1,100 from the previous year. Think of it as bonus ammo you can fire at your tax bill. Now, for those looking to use tax planning, the higher standard deductions increases the amounts you can save by placing children on payroll. Savvy business owners tax plan to pay children up to the standard deduction tax-free. The standard deduction amounts are also important to see if it makes sense to itemize or maximize tax savings through things like charitable giving. Speaking on giving, the annual exclusion for gifts also increases up to $18,000 for the calendar year 2024. That's increased from $17,000 that was with calendar year 2023. If the tax code feels like a minefield, call in reinforcements. A tax professional can help you navigate the complexities and save every dollar possible. JDB Tax Strategy helps business owners legally save money on taxes without fear of the IRS by leveraging the tax code to the fullest extent. After booking a call with us at jdbtax.com for a consultation, we'll build a personalized battle plan to minimize your tax burden and maximize your wealth. So subscribe, hit that notification bell, and join me on this epic quest to conquer taxes and claim your financial throne. I post tax tactics every Tuesday and Thursday. See you next time, tax warriors.